fair to say that the FCA's heart was in the right place and the banks have gone about it in quite a cynical way in terms of how they've interpreted it, implemented it? I've pulled a pin. I'm going to throw that out to the room.
Cheers, man.
Our second story on the show today concerns the FCA questioning banks on how they've set these their new overdraft rates. So the regulator sent letters to most high street banks after each one introduced a 40% overdraft fee. So the FCA wants to know how these banks decided on that particular rate. And it's also inquired about how these companies will treat customers who are worse off following the changes. Last week, the regulator drew fire after it announced 3 in 10 customers will be worse off after the overdraft changes are in place. And this is money actually reported that about 8 million customers would lose out under the new policy. So I guess it's important to give a little bit of background on this one. So according to official numbers, there's roughly about 19 million people in the UK that use an arranged overdraft, about 14 million people that use an unarranged overdraft, and about 7.3 million people each year that use a combination of arranged and unarranged overdrafts. At an industry level, there's about £2.4 billion in revenue from overdrafts in 2017. And startlingly, about 30% of that came from unarranged overdraft fees. So that's what the FCA has tried to sort of weed out of this setup at the moment is those fees and charges, and to set one standard rate across arranged and unarranged overdrafts to make it easier to understand and clearer and ultimately fairer for customers. Is it fair to say that the FCA's heart was in the right place and the banks have gone about it in quite a cynical way in terms of how they've interpreted it, implemented it? I've pulled a pin. I'm going to throw that out to the room.
Cheers, man. Isn't it a coincidence that it seems to be that everyone's setting it around the 40% rate? I don't want to get ourselves into trouble here by suggesting anything, but it's one has to ask whether the economic models within the banks are actually that good that 40% across everybody is the rate to set overdrafts to still maintain the revenue that they require, because obviously they're making about 2.5 billion, I think, across the lot of last year. Versus the cost versus actually meeting this regulation. So,
but isn't the worrying bit the fact that 30% of that 2.4 billion has come from fees and charges? So, you've got the FCA that are referring to the overdraft market as dysfunctional. That's a quote. But I think at the very least we can probably all agree that how it's set up and the bank's incentives clearly don't align with good customer outcomes.
Yeah, and the FCA have been quite open with the fact that about 7 out of 10 people at the moment, as in when this is launched, I think it's in April, isn't it? When it's launched, 7 out of 10 people are going to be better off because of this regulation and the implementation of it. So, heart's in the right place, trajectory is good, but it's not the most. I suppose the tone of the news story reads a little bit differently.
It's a bit of a weird one because it feels like they're trying to make a big deal out of how the FCA have kind of messed this up. But when you read it and you read the comments, you kind of think about it. It doesn't. I don't know. It doesn't seem to be the scandal that everybody sort of wants it to be, because they've done a good thing. They're putting transparency into something that is. We've all presumably been students, or at least all gone through being early 20s and used overdrafts and hated every minute of it. And it's a horrible position to be in. It's a rubbish part of the market. So to put some transparency in there, even if that first step is, oh dear, we've kind of got this weird behaviour of everybody picking quite a high number, but it can come down.
Yeah, and also
at least there's something.
Yeah, I agree, and I think it sounds like a high number. Probably a few of us have got overdrafts. I've got one that I dip in and out very so often, and it's not that high. I don't know what it is. It's the low single digits. But if 7 out of 10 customers are ending off in a better place, I've got to assume that last 3 are people who can probably more easily afford to not utilise their overdraft. So I've actually, since this was implemented, decided that I'm going to open a couple more neobank accounts and some credit cards and move my money there, which I can do because I would just use my overdraft for convenience, really.
The credit card comparison is an interesting one as well, because actually where we're ending up now at 40%, that's roughly twice the standard or the average credit card interest rate. And actually at 40%, it's higher than a lot of equivalent payday loans.
And that's why it's interesting, right? Because it's almost, that's the reason they've picked this way of looking at things, is that you can make that straightforward comparison. And so really it started a conversation now. Every personal finance publication and is tweeting about this or talking about it. And therefore maybe it is making people that have dipped into their overdraft for years and not really thought about that charge, thinking, right, actually, yes, is this quite high? Should I be moving my money or doing something differently? And there will be, there's certain accounts that I think have been now named as being lower, and there's ones that might win out of this. And I think the challenger banks they've taken a little bit of a different view. I think Mondo and Starling have a kind of tiered based on credit score, so it's like 15%, 35% up levels. So I think I guess it's done part of the job, which is making people informed of the fact that this exists and therefore making it easier for them to compare. But I agree that it feels like a high number.
Well, I mean, I would have liked to have seen, or wouldn't it have been nice to have seen one of the banks release this and this rate, but alongside it say, but actually, our ultimate goal is to keep people out of an overdraft. Because of that, we're going to launch XYZ feature. I think that would have been, again, I think the tone is we're setting it here, we're setting it there. Customers don't, to your point, no one really knows, whether it's 40%, 50%, and I don't actually think customers, when we speak to them about their transactional accounts, and you get it and you understand the mentality of why people switch accounts or why people go to certain providers, the specific rate of an overdraft isn't normally very high up there. Everyone just knows it's going to be, quite large. So actually, what they really need help on is to stay out of the overdraft or to have mechanisms to not be charged, an exuberant rate in the first place. So I would have liked to have seen that kind of comms go out with these rates, which would have been nice.
Sorry, go on, Ross.
I was just going to say, it will be interesting to see what the banks come back with in terms of how they intend to deal with those customers that are going to be worse off. Just an interesting take that I think I read in one of the comments or one of the articles that I read when looking into this piece is that it seems that banks are now helping out the people who are less organised in terms of borrowing, who would regularly dip into an unarranged overdraft, and actually it's the people who are more arranged who are more organised to have an arranged overdraft in place that are paying the price for that. I thought that was an interesting take.
Which I think is fair, right? Because those that understand their finances are more able to make those choices. And I think previously it wasn't just the rate, but it was the fact that you get kind of one-off fees, right? So you don't realise you dip into it twice a month. At the end of the month, you're struggling to pay the bills, and then you get a £20 fee immediately. It's actually very high as a percentage, but it's done as a one-off fee. So I think it does make it a lot clearer.
Yeah, I was just going to comment. I think this is an opportunity for neobanks and for incumbent banks, because it's very much, it's a big figure. People are very familiar with unarranged overdrafts and arranged overdrafts. And you can say, yeah, we're going to cut that rate. We're going to release these features. It's a reason for customers to come to a bank, but the bank still to make money from that. It's genuinely a service that they're selling. And, that's quite interesting to see a kind of, focus on something that's genuinely revenue driving for banks.